my presentation on cash flow statement, International Public Sector Accounting Standard, Ipsas, number 2. In this presentation, I will explain the meaning of cash flows, the method of solving problems involving cash flow statement, the heading under which statement of cash flows can be prepared, which include operating activities, investing activities, and financing activities. I will give the format for presenting statement of cash flows. I will equally explain all those activities. I will equally solve questions as work example. Ipsas 2. Cash flow statement. Ipsas 2. Cash flow statement. Ipsas means International Public Sector Accounting Standard. International Public Sector Accounting Standard. And this standard deals with cash flow statement. Cash flow statement. When we say cash flows, so I said it can be divided into cash inflows and cash outflows. Cash inflows and cash outflows. Cash inflows and cash outflows. That is cash flows. Cash flows are inflows and outflows of cash and cash equivalent. Inflows and outflows of cash and cash equivalent is said to be cash flows. Therefore, a statement that shows the cash inflows and the cash outflows of government over a given period of time is said to be the cash flow statement. Cash flow statement is a statement that shows the cash inflows and the cash outflows of government over a given period of time. This Ipsas 2 is a replacement, is equivalent of IAS number 7 on your on your financial reporting, International Accounting Standard number 7. So the equivalent of it is Ipsas 2 in government or in public sector. I'm telling you that cash flow statement is a statement that shows the cash inflows and the cash flows of the cash outflows of the government over a given period of time. Neither the statement of financial position or statement of profit or loss gives satisfactory explanation. Neither the statement of financial performance and the statement of financial position gives a satisfactory explanation of how a business obtains and uses its cash. Neither the statement of financial performance nor the statement of financial position gives a satisfactory explanation of how the business uses its cash. The cash flow statement is of utmost importance. It's of utmost importance and very revealing of the core operations of the federal government, parastatals or board on the affordability or otherwise of adequate liquid resources. So now I want to look at the heading under which statement of cash flows or cash flow statement can be prepared. The statement classifies periodic cash flows into operating, investing, and financing activities. So what do you mean by operating activities? Operating activities. Operating activities, these are the revenue received. Operating activities are the revenue received and expenditure paid by government. The revenue received and expenditure paid by government in the course of performance of fiduciary duty. In the course of performance of fiduciary duty imposed on them by the citizen that falls within their principal activities. I've defined operating activities as the revenue received and expenditure paid by government in the course of performance of fiduciary duty imposed on them by the citizen that falls within their principal activities. Meaning that there are two things we are going to look into. Number one, you have the revenue of the government, and then you equally have the expenditure incurred by the government. So those are the two things. So I want to give you the examples of operating activities. Examples. The first example I'm going to look into are revenue. So government receives their revenue in various sectors or sources, or from various sources. Number one, you can have statutory allocation. Statutory allocation is one source of revenue of the government, and that will fall under operating activity. The second one is value added tax, share of value added tax, share of VAT, value added tax. So value added tax is also another source of income of government. We also have internally generated revenue. Internally generated revenue is also one source of revenue of the government. Internally generated revenue is a source of revenue of the government. Number 4, we have grants and subventions. Grants or subventions is also another source of revenue. Then we also have miscellaneous income. Miscellaneous income is another source of revenue of government. Then we have cash received from taxes. Cash received from taxes, levies, and fines. All these items falls under operating activities. Cash received from taxes, levies, and fines. Then we have cash received from royalty. Number 7, cash received from royalties. Cash received from royalties, fees, commission, etc. etc. All these are operating activity. We also have number 8, cash received from litigations. Cash received from litigations, that is from court case. All these are sources of revenue of government. All these are sources of revenue of government. And I'm talking that this revenue, they all fall under operating activities. Operating activities. So then we also have expenditure incurred by the government. Expenditure. So all this expenditure too, they also fall under operating activities. Just know that the revenue are inflows, while expenditure are outflows. Revenues are inflows, while expenditure are outflows. Number 1, we have personnel emoluments. Personnel emolument. Emolument is one form of expenditure that falls under the normal activities of the government. We have pension and gratuities. Pensions and gratuities. Pension and gratuities. Gratuity is a lump sum, while pension is a salary paid to government, to a retired public servant to their death. Number 3, we have consolidated revenue charges. Consolidated dated revenue charges. This is a charge. A charges is an expenditure. Charges is an expenditure. Number 4, we have overhead cost. Overhead cost. These are all payments. Number 5, we have public debt charges. Public debt charges. Then we also have recurrent grants and subventions. Number 6, recurrent grants and subventions. These are they all fall under operating activities. Then the next one, number 7, we have subsidies. Number 8, we have miscellaneous expenses. These are all operating items. They are operating activities. I've told you they are majorly the revenue, that is the income, the revenue, and expenditure incurred by government in performance of their fiduciary duty. That falls under that falls under their principal activities. So the second heading I'm going to look at are investing activities. Investing activities, not investment, investing activities. What do you mean by investing activity? Investing activities are the acquisition. They are the acquisition and disposal of long-term assets and other investments not included in cash equivalent. Investing activities are the acquisition and disposal of long-term assets, that is non-current assets, and other investments not included in cash equivalent. So, example of investing activities, we have purchase of non-current assets. Purchase of non-current assets. That is investing activities. Purchase of non-current assets. It includes all expenditure on capital project. Let me say capital expenditure. Let me include that. Capital expenditure. All expenditure incurred on capital projects falls under investing activities. Number 3, we have proceeds. Proceeds from sales, from sale of non-current assets. Proceeds from sales of non-current assets. Then we also have purchase or construction of assets. Number 4, purchase or construction of assets. That is capital item. Then we also have purchase of financial market instruments. Purchase of financial market instruments. Purchase of financial market instruments. That is investing activities. Purchase of financial market instruments. Cash received from sale of equity or debt instruments. Or cash received from sales of equity or debt instruments. That is investing activities. Cash received from sales of equity or debt instruments. Number 7, cash advances and loans. Cash advances and loans made to other parties. Made to other parties. Cash advances and loans made to other parties. So then we also have cash received from future contracts. Number 8, cash received from future contracts, forward contracts, swap contracts, swap contracts. They all fall under investing activities. Then options, option contracts, option contracts. Except where the contract are held for trading purposes. Except where the contract are held for trading purposes. Except where the contract are held for trading purposes. All this falls under investing activities. All this falls under investing activities. The third heading is financing activities. Financing activities. Financing activities. What do you mean by financing activity? Financing activity are the activities that result in changes in the size and composition of equity and borrowing of government. Financing activities are activities that result in changes in the size and composition of equity and borrowing of government. Examples of financing activities. Examples. Number 1, we have proceeds from loans and other borrowing. Proceeds from loans and other borrowings. Proceeds from loans and other borrowings. Number 2, we have repayment of loans. Repayment of loans. And the third one, we have finance lease payment. Finance lease payment. All these fall under financing activities. Now, let me go back to investing activities. The moment you get to investing activities, the first thing you need to check is the movement in non-current assets. The movement, just go to non-current asset section. Investing activities. You check the movement in non-current assets. What are those things that you think can affect your non-current assets? Number 1, there could be acquisition of non-current assets. That is addition to it. Addition to the non-current asset. Then the non-current asset may be depreciated. These are the items that will affect the non-current asset. Depreciation. The non-current asset may be impaired. You can have impairment loss. Then the non-current asset may be revalued. You can have revaluation, surplus, or you may also have revaluation deficit. These are the item deficits. These are the items that may bring about changes in non-current asset. I've told you that the moment you get to the non-current asset, you check the movement in non-current asset. So how would this affect our non-current assets? So we want to check how it affects it. In fact, you might also have disposal. Let me include that. Number 6, disposal of non-current assets. Disposal. These are items that may bring about changes in non-current assets. Now, then, in your movement in non-current assets, you check the movement in non-current assets. Anytime you get to the investing activities, that is what you need to check. Under investing activities, you check the movement in non-current assets. Number 1, you always start with the opening balance. Opening balance. Opening balance. Then where there are depreciation, what will happen to your non-current assets? Depreciation will bring about reduction in non-current assets. So you deduct that. So when you revalue non-current assets, you may have revaluation surplus where it is revalued upwards. That means the non-current asset will increase, so you add it. And where the non-current asset is revalued downwards, you can have revaluation deficit. And where it is revalued downward, that means the non-current asset will reduce. You may also have impairment loss. Impairment loss will bring about the reduction in the value of non-current assets. You may also have disposal. Please, it is the carrying amount you need to have here. Carrying amount that is the net book value. The carrying amount, I mean the net book value, that is cost less accumulated depreciation. The accumulated depreciation I'm talking about is the one sold. The cost that need to consider here is the cost of the non-current assets sold minus the accumulated depreciation related to the non-current asset disposed. So you subtract that. So where non-current asset is disposed, that means the asset of the entity will reduce. Then you consider the closing balance. Closing balance. Where the closing balance exceed the casting, when you cast all this, plus and minus this, and the closing balance exceeds what you have. Let's assume this is what you have before considering the closing balance. The closing balance, where it exceeds, that means there are purchases of non-current assets. Then you have purchases of non-current assets. That is acquisition of non-current assets. This amount will appear under investing activities. And where non-current assets are sold, the proceeds from sales of non-current assets too will fall under investing activities. Then to get the proceeds now, you may not be given the proceeds from sales of non-current assets. Proceeds from sales of non-current assets. Proceeds. You start with the carrying amount of the non-current assets sold. The carrying amount of PPE disposed. Carrying amount of PPE disposed. Let us assume we have the PPE. Its carrying amount. Then if it is sold at a loss on disposal of PPE, you subtract the loss. And if it is sold at a profit, we have profit from disposal of PPE. You add the profit, then you get the proceeds. So this amount represents the proceeds from disposal of PPE. Then you check out that non-current asset you are given in the question. You might have intangible assets. Then you look at the movement, opening balance. Then you consider the closing balance. You consider what will bring about changes. Maybe that will lead to either addition. Take for instance, you have intangible assets. If it is amortized, amortization will lead to reduction in intangible assets. Therefore, you start with the opening balance less amortization. Then you consider the closing balance. Where the amount you obtain is negative. That is where the closing balance, if you consider the opening balance, that is intangible asset. Then you have the opening balance. Then you have this. Then you have amortization. I've told you that amortization will bring about reduction. So you subtract it. So, and you have this. Then you now consider the closing balance. Where the closing balance exceeds this, when you subtract it, that means it will be negative. Where the closing balance exceeds this, then the difference represents the purchase of intangible assets. Purchase of intangible assets. So you apply similar things to other non-current assets. So that is under investing activities. Don't forget, I've told you that the moment you get to investing activity, what you should check is the movement in the non-current assets. You check the movement in non-current assets the moment you get to investing activities. And anytime you get to the financing activities, you check the movement in equity and borrowings. You check the movement in equity and of preparing statement of cash flow. Methods of preparing statement of cash flow. In accordance with Ipsas 2, two methods can be used. Number one method, we have direct method. Number two is indirect method. My focus in this presentation shall be on the first method, which is direct method. My next presentation shall cover indirect method. What do we mean by direct method? Direct method shows the disclosure of major classes of gross cash receipts and payment. Direct method shows the disclosure of major classes of gross cash receipts and payments in the form of the revenue of government and the expenditure, like the statutory allocation, the VAT, share of VAT, internally generated revenue, miscellaneous income, and others. Personnel costs among the expenditure, personnel pensions and gratuity, consolidated revenue charges, overhead costs, and others. So direct method shows those items under operating activities. So when we get to indirect method, then we shall consider that. The minimum requirements now. Minimum requirements for the preparation of statement of cash flows. Minimum requirements for the preparation of statement of cash flows. Number one, you'll be given one statement of financial performance. One statement of financial performance. That is the minimum requirement. Where two statements of financial performance is given, only one of the statement, that is the current one, will be relevant. That of the comparative period will not be relevant. So statement of financial performance for the comparative period will not be relevant. So the only one that will be relevant is that of the current period. So, two statements of financial position. Two statements of financial position. Three, notes to the financial statements. Notes to the financial statements. That is the minimum requirement for the preparation of statements of cash flows. So now let's consider the format. Format for preparing statement of cash flows under direct method. So we have Federal Republic of Danjuma. Federal Republic of Danjuma. So we want to prepare statement of cash flows. Statement of cash flows or cash flow statement of cash flows for the year ended December 31st, 22x. The first heading will be operating activities. Operating activities. I've told you that under this activity you are going to have the revenue and the expenditure of the government that falls under their principal activities. As part of this, you have statutory allocation. Statutory allocation. This is a revenue. Then we have share of value added tax. Share of value added tax is also a revenue to government. You have direct taxes. Direct taxes is also one form of revenue. Then we have commission, fees, and fines. It's also one form of revenue. We have licenses and internal revenue. Licenses and internal revenue. Then we also have mining, revenue from mining. Then we also have sales or rent of government property. Sales or rent of government property. Let me have rent of government property. Rent of government property is also another form of revenue of the government. Interest repayment general. Interest repayment general is also another form of revenue. Earnings and sales. Earnings and sales is another one. Then we have reimbursement. Reimbursement. Then we have share of special grant. Share of special grants. So all these are revenue. So when you sum it up, you have the total receipts from revenue. Then we have payments. The payments include, all these are still operating activities. You have personnel cost. Personnel cost or personnel emolument. Then you have overhead charges. Overhead charges. We also have consolidated revenue funds charges. All these are charges. Then we have subvention to parastatals. Subventions to parastatals. Then we have, so after deducting these payments, let me have other payments, others. After deducting them, the total of this payment is this. You deduct it from your receipt. You have net cash flows from operating activities. Net cash flows from operating activities. The next heading is investing activities. Investing activities. I've told you that the moment you get to this section of the statement of cash flows, that the number one thing you need to check is the movement in non-current assets. You check the movement in non-current assets. Number one, you have capital expenditure of various sectors of the public operation. Then we have purchase of foreign currency security. Purchase of foreign currency security. Purchase is an outflows, capital expenditure is an outflows. Then we have purchase of non-current assets. Purchase of non-current assets is an outflows. Proceeds from sales of non-current assets. Proceeds from sales of non-current assets. That is an inflows. Then you sum it up. You now get net cash flows. Net cash flows from investing activities. Net cash flows from investing activities. That is investing activities. After investing activity, the third heading will be financing activities. Financing activities. Financing activities. I've told you that this activity brings about a change in composition of equity and borrowing. I've told you that it brings about changes in composition of equity and borrowing. That is financing activities. Now, I've told you that whenever you get to this section, what you need to check is the movement in equity and borrowing. Then we have proceeds from external loans. Proceeds from external loans. Proceeds is an inflows plus. Proceeds from internal loans. Proceeds from internal loans is an inflows. Proceeds from internal loans is an inflow. Repayment of loans. Repayment of loans. This repayment of loans could be internal or external. Internal, repayment of internal loans or repayment of external loans. Repayment is an outflows. Then you have dividend received. Dividend received. These are financing activities. Financing activities. You cast this. You now get net cash flows. Flows from financing activities. After this section, you add the net cash flows from operating activities and the net cash flows from investing activities. Then you add the net cash flows from financing activities. Then you get net cash change. Net cash change or net change in cash and cash equivalent. Net change in cash and cash equivalent. Then the next thing is cash and cash equivalent at the beginning of the period. Cash and cash equivalent at the beginning, when you add it, you get cash or cash equivalent at the end of the period. So that is the format for preparing statement of cash flows under direct method. So we therefore want to take questions as work example. This work example shall be obtained from Ezikan study test, the study test of the Institute of Chartered Accountants of Nigeria. Example: the following information have been extracted from the records of welfare state of Nigeria for the year ended 31 December 22x. All figures are in thousand. We have personnel emolument 2 million. Personnel emolument 2 million. Consolidated revenue charges, and that is 1 million. Statutory allocation, and that is 20 million. Proceeds from the sale of tangible assets, and that is 100,000. Purchase of marketable securities, that is 50,000. Then we have purchase and construction of tangible assets, that is 500,000. Share of value added tax, 200,000. Share of excess crude oil, 100,000. Internally generated revenue, 10 million. Gratuities and pensions, 15 million. Miscellaneous income, 50,000. Overhead expenses, 36,000. Recurrent grants made, that is 20,000. Miscellaneous expenses is 10,000. Servicing and repayment of public debts, 100,000. Gratuities and subvention from government from non-governmental organizations, 200,000. Proceeds from loan and other borrowings, 300,000. Dividend received, 10,000. You are required to prepare the state's cash flow statement for the year ended 31 December 22x using the direct method approach. So you want to prepare statement of cash flows for welfare states of Nigeria. Welfare states of Nigeria solution. We have welfare states. State of Nigeria. State of Nigeria. You want to prepare cash flow statement for the year ended 31st December 22x. You want to prepare cash flow statement for the year ended 31st December 22x for welfare state Nigeria Limited. So I'm telling you that the first heading is operating activities. Operating activities. I've told you that you have revenue and expenditure of the government that fall within their principal activities. The first item is personnel emolument. Personnel emolument, and that is 2 million. That is outflow. That is payment. That is operating activities, but it is payment. Consolidated revenue charges, because it is a charges, it's also a payment. It is operating activity. Statutory allocation, that is revenue. So you have statutory allocation. Statutory allocation. Let's put naira in two places. There are triple zeros at the top of the question. You should equally add yours. The triple zeros, please don't forget to add that since it's at the top. Statutory allocation, that is 20 million. Statutory allocation is 20 million. Then the next thing is proceeds from the sale of tangible assets. This is an asset. I've told you that those activities that result in acquisition and disposal of non-current assets, that is investing. So that means this is investing activities. Then we also have purchase of marketable securities. That is also an investing activities. Purchase and construction of tangible assets, because they are non-current assets. That is also an investing activities. Share of value-added tax is also one form of revenue to government. Value-added tax, so is operating activity. Share of value-added tax, and that is share of value-added tax. That is 200,000. 200,000. So you put that 200,000. That is revenue. Then you have share of excess crude oil. That is also a revenue to government. So it's an operating activity. Share of excess crude oil. Share of excess crude oil. Share of excess crude oil, and that is 100,000. Share of excess crude oil is 100,000. So it's revenue. Then you have internally generated revenue. It's also one form of revenue to government, which is 10 million. 10 million. Internally generated revenue. Internally generated revenue, and that is 10 million. 10 million. Internally generated revenue is 10 million. We have gratuities and pensions. This is a payment which also arise under the principal activities of the government. So it is an operating activities, but it is a payment. Miscellaneous income is also one form of revenue to government. So that will be reported as operating activities. Miscellaneous income. And how much is that? Miscellaneous income, that is 50,000. 50,000. 50,000. Then overhead expenses. Overhead expenses is 36,000. Overhead expenses is also a payment. So we are not yet dealing with payment. Then recurrent grant made. This is the grant made by the government. It's not grant received. It's also an operating activities. But since it is the payment made by the government, so we treat it as a payment. Miscellaneous expenses, this is also a payment. It's also an operating activity. Servicing and repayment of public debts of 100,000 is also an operating activity, but it's a payment. Grants and subvention from non-governmental organizations. It is the government that received these from non-governmental organizations, and that is 200,000. Grants and subventions received. Grants and subvention received. The one received from non-governmental organization, and that is 200,000. 200,000. So it's an income of government. So it's a receipt Then proceeds from loan and other borrowings. Proceeds from loans and other borrowings. This loan, the loan borrowed, is financing activities. This is a financing activity. Dividend receipt is also a financing activity. So now we cast. Let's sum up the revenue before we deal with the expenditure. So we have 20 million. 20 million plus 200,000 plus 100,000 plus 10 million plus 50,000 plus 200,000, and the total revenue is 30,550,000. 30,550,000. That is the total revenue. After revenue, you have the expenditure. So less the expenditure. The expenditure includes, the first one, we have personnel emolument. Personnel emolument, and that is 2 million. Personnel emolument is 2 million. So we less it. Personnel emolument, and that is 2 million. Then consolidated revenue charges. Consolidated revenue charges, which is 1 million. CRF, consolidated revenue fund charges, and that is 1 million. So you are going to less that. The next item is statutory allocation, which has been used as a revenue. Proceeds from sales of tangible assets, we say that is investing. Purchase of marketable security, we say it is investing. Purchase of constructions of tangible assets, we say it is an investing activity. Share of value-added tax, we say is a revenue which have been considered. Share of excess crude oil have equally been considered. It's a revenue. Internally generated revenue have equally been considered. Gratuities and pensions, and that is 50 million. Gratuities and pension. Gratuities and pensions, and that is 50 million. Yes, the next item is miscellaneous income have been considered. Then we have overhead expenses of 36,000. Overhead expenses. Overhead expenses. We are still on operating activities, and that is 36,000. Overhead expenses is 36,000. Recurrent grants made, and that is 20,000. Recurrent grants. Recurrent grants made, and that is 20,000. 20,000. Then we have miscellaneous expenses, and that is 10,000. Miscellaneous expenses, and that is 10,000. Miscellaneous expenses is 10,000. Then we have servicing and repayment of public debts, and that is 100,000. Servicing and repayment. Servicing and repayment of public debts. Servicing and repayment of public debt is 100,000. 100,000. Then we also have grants and subventions from non-governmental organizations that have been considered as revenue. Proceeds from loans and other borrowings, we say it's financing activities, and dividend receipt is a financing activities. So now let's sum up the payments there. Let's sum it up. So we have 2 million plus 1 million, that is 3 million, plus 15 million, plus 36,000, plus 20,000, plus 10,000, plus 100,000. The total of the payment is 18 million 166,000. When you deduct the payment from the revenue, you deduct the expenditure from revenue of 30 million 550,000. Then you have the net cash flows from operating activities, and that is 12 million 384,000. That is net cash flows from operating activities. Net cash flows from operating activities is 12 million 384,000. The next heading is investing activities. Investing activities, that is the next heading. Investing activities. I've told you that you check the movement in non-current assets. Now let's go through it. So we have proceeds from the sale of tangible assets, which is 100,000. Proceeds from sales of tangible assets is 100,000. So we have proceeds from sales of tangible assets, and that is 100,000. The proceed is an inflows. So proceed is an inflows. Then we also have purchase of marketable securities, and that is 50,000. Purchase is an outflow. Purchase of marketable security. Purchase of marketable security, and that is 50,000, and is an outflows. Purchase will result in payment. Anytime you make a purchase, then cash will be expended. Purchase of marketable security, 50,000. Then the next one is purchase and construction of tangible assets, which is 500,000. Purchase and construction of tangible assets. Money will be expended on that. It's a capital expenditure, 500,000. That is now flows as well. So you check if there are other investing activities. 500,000 have been considered. So then you check. This is value added, crude oil, internally generated. So there are no other investing item. Nothing falls under investing activities. No other investing activities. Those items that fall under the investing activities have been considered. So this is dividend you see is the financing activities. So 100,000 minus 50,000 minus 500,000. There you have outflows of 450,000. That is 450,000 outflows. That is net cash flows from investing activities. From investing activities. Net cash flows from investing activities, and that is 450,000. 450,000 outflows, 450,000. We have considered the operating activities and investing activities. The next heading will be financing activities. I've told you that financing activity will result in changes in composition of equity and borrowings. Financing activities. We say it will result in changes in composition of equity and borrowings. So let's go through the details, go through the questions to find out if there are any items that will fall under financing. So go through it one after the other. So we go through it. We have proceeds from loan and other borrowings. Proceeds from loan and other borrowings, 300,000. That is financing activities. Proceeds from loans and other borrowings. Proceeds is an inflows. Proceeds from loans and other borrowings. That means you receive it. That is why you have it as proceeds. The money you receive from loans and other borrowings, and that is 300,000, which is an inflows. Then you also have dividend receipt, which is 10,000. Dividend receipt of 10,000. Dividend receipt 10,000. Dividend received 10,000. So no other item apart from that. So when you sum it up, dividend receipt is 10,000. When you sum it up, you have it to be 10,000. 10,000. Oh, sorry, dividend received is 100,000. 100,000. So 100,000. 100,000. When you sum it up, you have it to be 400,000. That is net cash flows from financing activities. And that will be 400,000 inflows. So, to this, your operating activity, you have an inflows of 12,384,000. 12,384,000. Then under financing activity, investing activity, you have minus 450,000, negative 450,000. Then financing activity, you have 400,000. 400,000. Then you have 12,334,000. 334,000. This is your net cash change. After this, you have cash or cash equivalent at the beginning. At the beginning of the period. And that is not given, so we have dash. So when you sum it up, you add need to this, you still be having 12,334,000. This will be cash or cash equivalent at the end of the period. So that is the solution to the question. My next presentation shall cover the use of indirect method. I will equally solve questions from the past examination questions.